Yeah. Okay. Good morning, guys, from Zoom. Let's just go ahead and start. Today, we're going to talk about just FHA loans and FHA loans, specifically about buying houses. When you buy houses with FHA, it's kind of like questions and answers with FHA. I'm going to cover a couple of subjects and we'll go from there. If I go too fast, you can please interrupt me, ask me questions, and just say, hey, Oscar, what about this? Or what about this other scenario? Because that's what we're going to talk about. So just very briefly, we're going to start with this. The first thing to understand is that FHA is not the lender. FHA is the mortgage insurance. So whoever gives you the loan is actually a bank. And FHA insures it. FHA is the mortgage insurance. So that's the reason why sometimes you run into lenders that they say, well, I can do an FHA with 580, and another one can do an FHA with 550, and another one can do an FHA only to 620. But why the difference if they're all FHAs? Because FHA has the rule that they can do a loan down to 500 if they want to. Now the lender is he willing to take the risk to go down at 550, to go down at 500, or to go down at 580? So that's up to the lender. So the lenders have their own rules, and they say, okay, I don't go down to 580. Another one say, hey, I can go all the way to 550. As a company here, we go down to 580. And that's the reason why, because FHA is the mortgage insurance, the bank is the one giving you the loan. One misunderstanding is that a lot of clients and believe it or not, the loan officers also have come to me and have asked me this, or they were under the assumption that this is the fact. They treated FHA as a first-time home buyer program. Now, if you treat FHA as a first-time home buyer program, it means that once you buy FHA, you cannot buy FHA again. And that's a misunderstanding. So let's talk about that. So if you buy a house.
Okay. Can I interrupt you on something? We go as low as 580, as long as the DU approves it, right?
As long as the DU approves it, yeah. Okay. If it doesn't approve it, you can go manual underwriting. But manual underwriting, then it becomes, for example, a rule from FHA is that you cannot have late more than 60 days late on any account in the last 2 years. So that is very hard for an underwriter to do manual underwriting at 580 and not have those late. So an underwriter is going to say no, but DU might approve it.
So let's say, for example, someone has 590 and DU is not approving it. You can put on DU 5% instead of 3.5%, and sometimes that will approve it.
Yes. Yes.
Even for refinancing, I have a client who just missed their mortgage last month and the DU approved it.
So as long as the DU approves it, then the DU approves it. But the rules of FHA, if you go by the rules of FHA on late payments and everything, is very specific on late payments. So now when you're having a credit of 580 and you want to do manual underwriting, you have to abide by the rules of FHA and the late payments. I was going to say something about that.
That if you can buy another FHA, if you purchase a house with FHA, and then you can buy another.
Yes. So you buy your first house, and you buy your first house as FHA.
No, on the screen.
Which one?
Put your pressing on one of the and that one.
So the first misunderstanding, like we were saying, is that you buy an FHA, you sell this house, you sell it. Can I buy FHA again? Yes, you can buy another FHA. Now, you can buy an FHA. If I sell it, can I buy another one? Yes. If I sell it, can I buy another one? Yes. So you can buy as many FHAs as you want to, as long as you don't have 2 FHAs at the same time. Now, FHA is not done. FHA is for owner occupancy. So if you use it for investment and you do this in a short period of time, either FHA or the investor is going to say, no, 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 you're using it for investment. You're using it for investment. You cannot do that. So if you buy a house and within 2 years, you buy 3 houses, that's a short period of time. That's a short period of time. I mean, some of you are going to ask, well, Oscar, specifically, what's the short period of time? There's no rule. Short period of time is short period of time. If it makes sense, it makes sense. If it doesn't make sense, it doesn't make sense. So you have to be very careful of that. If a client is using a property, just buying it, and then buying another one. Now, it could happen that, hey, Oscar, this is a truth, guy. I mean, what do you want me to do? Well, if it's a truth, can you prove it? If it's a truth, can you prove it? So I'm going to put an example. Right now. Let's just say that I rent and my house is in Colina. So I rent in Colina. And then I buy my house FHA. And this one is in Saticoy. And then I sell it. And I buy again another FHA. And I do it within 6 months. 6 months, 7 months. And now this one, I want to do another FHA. And this one is in Canoga Park, or whatever street on Canoga Park. Well, the lender is going to say, well, hold on a second. You just purchased this one 6 months ago. So I ran into a client that he purchased in Palmdale. And he purchased in Palmdale, and right afterwards, he was saying, hey, I like Palmdale, I like the area, but I wasn't aware of the driving, and my back is hurting so much. So now I want to buy this one. Well, that's a good excuse that you didn't know about the driving and everything. Do you have any doctor bills? Do you have anything that's going to back up your story? Because if you have a backup story, then it works. And if it works, it works. But when you buy Canoga Park, and a lot of people, they don't do this, but they should. In every house that I have left, and I have moved to another, the first thing that my wife does is that she goes to the postal office. Another wife says, obviously, yeah, you're a bad mother. The first thing that my wife does is that goes to the post office, and she goes to the post office and says, hey, I'm not going to live in this address anymore, so forward all my address to this one. Do you think that my wife only goes to the post office and she does that? She transfers all the addresses on the bank statements, on everything, to the new address. So when you buy this one, and the guy is actually investing, guess what the address of his bank statements, of his pay stubs, of his W-2s are going to be? Colina. Guy, I mean, at least show me Saticoy. At least show me that you moved to Saticoy and you actually moving and you didn't like Saticoy. So you have to transfer the addresses. I don't know, because the Saticoy, I never liked the area. Well, why the hell do you buy there? I mean, to an American, that's a dumbass story. I didn't like the area. So you have to make sure that everything makes sense. If it makes sense, it makes sense. If he wants to buy another FHA and it makes sense because his story makes sense, if it makes sense, it's going to make sense. And you're going to write a great letter of explanation. But if it doesn't, if the guy is actually investing in properties, FHA is going to bring it up and FHA is going to kick it out. Is there a rule? There's no rules. The bank will make the decision. We, Simply Mortgage, we are going to scrutinize this. We're going to make sure that your story makes sense. But it has to make sense with the addresses.
So meaning that someone can actually be doing flipping, right?
That is correct.
FHAs and selling them. And
That is correct.
buying them.
That is correct. David?
What happens when somebody buys as an owner occupied, but then he rent it out? It's gonna, FHA is gonna find out, or the lender is gonna find out?
Supposedly, when you sign the note, you're committing to living in the property at least for a year. At least for a year. So you're committing to the lender that you're going to live there. Now, FHA is only loans for owner occupancy. Now, in reality, you can do a streamline on a property investment that you had on FHA. So FHA does allow you, if you live in the property for the first year, and then you decided to rent it out, and you can even refinance it as an investment property with FHA.
What liability the loan officer will have in that case?
If it gets rented before, you mean?
Yeah.
So we have a situation right now. This has nothing to do with FHA, has more to do with the lender, the bank, where a person purchased this property. A person purchased this property 2 years ago, and this is a real story here at the company. So he purchased this property 2 years ago, and he said that it was going to be owner occupancy, and the guy never moved there. Now the lender, I mean, obviously it was us, but we sold the loan, and we sold the loan to Chase. Now the guy has an account with Chase. So the first thing that the guy reports the property, and this, a lot of people don't understand this. When you have insurance on this property, and the insurance will cover as owner occupied or as an investment. So the guy called the insurance, and the guy told the insurance, hey, I don't live there, so give me a renter's insurance. First thing that he did. So Chase gets the insurance. Now he's getting an insurance for an investment property instead of an owner occupied property. That was his first mistake. Second mistake, that the renter, he asked to pay the rent directly from the renter, and he told her that go and pay the rent to Chase and deposit it into my bank account. And the renter put on the check rent. So he was depositing rent. So Chase had the mortgage, and he had his account, and in his account there was the deposits of this property as rent. 2 years have gone by at about no more than 4% rate. And no more than 4% rate, and the lender is saying, hey, Simply Mortgage, I don't want this loan. I don't want this loan, take it back.
After 2 years.
After 2 years. Now, what is the responsibility of the loan officer? What is the responsibility of the lender? We still don't know what we're going to do with this. If we get this loan back and we report it as we got it back, and we service the loan, Simply Mortgage service the loan, it's bad in our books for other investors. When they see that we're getting loans back, so we have to sell it, and we have to sell it for a less price. And sometimes we take the hit. We do charge the loan officer for the commission that he made.
Even after 2 years?
Even after 2 years.
Okay, so the problem is not that 2 years, because if it's been 2 years, you can rent it. The problem is that he changed the insurance
From the beginning.
so he never moved.
He never lived there.
This is saying he never moved in.
He never lived there.
Hopefully the guy will cooperate, refi or something.
Obviously, he's not. At 4%, he's not.
Rates are
Why you never come
disgusting now compared to whatever he had then.
What if I was new in the business 2 years ago and that was one of my first loans and I didn't know better?
You learn the hard way.
The client says, I'm gonna leave, you're gonna put on.
It's strictly talking. I mean, we have in Mexico, we have the los perros de la yegua, los pelos de la yegua en la mano. So strictly, and this is something that I go back and forth with my partner. I says, hey, the guy committed fraud. If the guy committed fraud, we can initiate foreclosure. Yes. Initiating foreclosure is a pain in the butt. Then we rather take the loss than initiating foreclosure. Because to initiate foreclosure, there has to be a certain amount of time. If it goes a certain amount of time and the end of the year is done, then the end of the year, we need to report that we had a loan on our books and the investors are going to cut us out. So it's very critical. So we have to act fast. If we take it back from the investor that is from Chase, then do we privately service? So that's what we have to do.
Once it happened to me, one of my clients was helping his son to buy a house in Palmdale. I never knew that he was gonna rent it. I really thought the son was gonna move in.
Uh-huh.
And then after we close it, the insurance goes to the property and take pictures.
Mhm.
The insurance, and they had a sign to sell, for rent.
Mhm.
So that's how they find out because
Uh-huh.
of the insurance. So the insurance say, send a letter and say, hey, we have owner occupied, but it's a rented. And then we told the bank, well, when I find out, I said, you know what, tell them there was the previous owner. That he wasn't ready if he was gonna sell it or rent it. So you just remove it and you put all the
Mhm.
bills under your name and he was able to save it, but it was like a very.
No, we have plenty of stories. We have a real estate agent that came to me and says, hey, you want to buy in Bakersfield? I says, it doesn't make sense. It's an investment. And he just purchased owner occupied. He went to a loan officer, and the other loan officer says, well, I'm willing to do it. Let me talk to a bank. The bank says yes. They did it. Once they closed, they put it on Zillow, they put it on every place for rent. And the lender find out. Mhm. So those things, we're very careful, very careful. Mhm. Any questions? Any more questions, things? Mhm. Can I only buy FHA once? No, you can buy as many times as you want to, as long as it makes sense, as long as you sell the property. Can I have two loans at the same time, two FHA loans at the same time?
Yeah.
Okay, most of the answers that you're going to receive is no. You cannot have two loans at the same time. But you can, like Maria says, you can. So we're going to talk about it. Within a range of 100 miles, the rule is that you cannot have two loans FHA at the same time. 100 miles. So we're going to talk about the options here. And there's multiple options. So if I own a property in Vegas, FHA, and they transfer me to LA, and I want to buy FHA, then I can do two loans FHA. Two loans FHA.
As long as you're gonna leave and then.
In the new, So now I'm moving to LA. And I got transferred for my job, and I got a letter that I got transferred from my job. I can move to LA and buy FHA. So I can do two FHA loans at the same time. See, Gonzalo?
Oscar, yeah, can you stop there? Yes, I have a question there. And can you use income rental property in the old FHA or not?
Yes. So you can use the rental income to offset the mortgage on this one, only if this property has 25% equity. Only if this property has 25% equity. So you need to do an appraisal on this property. It could be a drive-by appraisal, and it can or cannot be an FHA appraisal on this property, on the vacating property, to prove that it has 25% equity. If it doesn't have 25% equity, you cannot use the rent on that property, regardless if it's 100 miles distance.
And that's just to offset the mortgage.
And that is to offset the mortgage. Does it make sense? Okay, so in this case, David, I have an FHA and I have an FHA investment property. So pretend that I already purchased both properties. So I have an FHA. So can I refinance this one? Can I streamline this one investment property? Yes, you can. So you can streamline an investment property FHA. If in the future interest rates drop and I want to streamline it. So that is the only case that you can do an FHA for an investment property. Now, I'm not going to tell you what to do, but I'm going to tell you how the rule works. I'm not going to tell you what to do. You figure it out what to do. If I own a property, FHA, and if I want to buy a property FHA in less than 100 miles, you cannot have two FHA loans. Can't. The way that you can is, let me just erase everything. The way that you can do that is if I have an FHA and my son who lives with me, his name is Javier, then Javier wants to go on his own. I'm gonna tell you what to do, but you can figure it out. And Javier is gonna owner occupy this one. And I'm going to co-sign for him. If I co-sign for him as a non-owner occupied, I can have 2 FHA loans at the same time under my credit. Does it make sense? I have to qualify with both mortgages.
Does Javier can have income or doesn't matter?
Javier has to have income as long as Javier has income. It doesn't, in the past, it needed to make sense that Javier can hold this property payments. Now it doesn't matter. So as long as Javier makes $5,000 every year, he's gonna own this property and I'm gonna co-sign for him and that's it.
You
The only-
co-signing, you're gonna get the hit from your property.
I'm gonna get the hit from the property, so I need to qualify with both mortgages. I need to qualify with both mortgages. But this is a way that you can have two loans.
Now, let me ask you, Oscar, and let's say you're gonna go back to your own loan. Can you then offset the payment of Javier's, showing Javier's been making the mortgage payments?
Okay, so this is the question that this is the question that I'm gonna put another variable. I'm gonna put another variable. So this is kind of the question that Ademar is asking. Here's Javier. Now Javier purchased this property. And I had a house, FHA, and I help him purchase this property. And I have an FHA. A year goes by, and now Penelope, my daughter, wants me to help her. So the question that Ademar is asking, hey, if Penelope is gonna buy another house, can I help Penelope? And can I remove this payment if I prove that Javier makes the payments? If I prove that Javier makes the payments on this property, then I don't have any liability and I can help Penelope on this property. So I can have 3 FHA loans if I want.
Right?
12 months. 12 months. Make sense? Now, I need to qualify with both mortgages here. I need to qualify with both mortgages here as long as I prove that Javier makes the payments on that one. So I can even have 3 FHA loans at the same time.
You can have many as sons and daughters you have.
Say that again?
De los hijos y las hijas que tengas. You have 5.
Up to as many kids as.
So I'm not gonna tell you what to, go ahead.
That rule just apply to the direct family or your brother, your sister, or just for the kids, for the sons?
It has to be family member. So family member is kids, parents, uncles, and I don't believe that the cousins involves cousins. No cousins.
Brothers.
Brothers, parents, grandparents, and uncles.
Nephews and nieces.
Nephews, no. Now, obviously, if you have a nephew, you're gonna say that it's not your nephew is uncle. So yes, it doesn't apply for cousins. So if you have a relationship with cousins, don't make him cousins, make him uncles. Makes sense. So there's a lot of clients that they want to buy in Palmdale and they live in Hemet. Hemet is on the way to San Diego. And they want to do that. Doesn't make sense. It doesn't make sense, dude, that you're gonna drive from Hemet. So do you have anybody in Palmdale that can buy in Palmdale? Do you have any family member that can go there? So as long as I can prove that they're going into the property, then I can use you as a non-occupant co-borrower. And I use you as a non-occupant co-borrower, and that's your property. Otherwise, It has to be an investment property. Mhm. Okay, now, FHA has a rule, and make sure that you don't forget this. Make sure that you don't forget this. Departing property. And the departing property is always, it can bite you in the ass or it can help you. But departing property. So if you have a house under conventional loan, if you buy a house under conventional loan, and you decide to buy FHA, you can do that. But FHA has the rule that it says, if the departing property is a mortgage, you need to qualify with both mortgages. You need to qualify with both mortgages. If you're going from conventional to FHA, if you want to do FHA, you need to qualify with both mortgages. You cannot use the rent on this one to offset the mortgage. If you buy conventional, you can. If you buy conventional, you can offset the mortgage with the rent. FHA doesn't allow you to do that. FHA doesn't allow you to do that. But what the guideline reads is from the departing property. From the departing property. So again, I'm not going to tell you what to do, but especially at the end of the year, you have to figure it out if you ever run into this situation, because I have. So if a client only qualifies FHA, I have to do FHA and I have to do the rent, and that's the only one because he has 640 FICO and because XYZ and everything. I sometimes what I have done is, do you have any family member that you can go and live with? So let's go and live and let's go and rent on this other property. So, and this one, in the taxes of 2023, we're going to declare it as a rental property. We're going to put it on your taxes as a rental property. And in January, February, we're going to buy this one. And what is the departing property? Is it this one or this one? The rental property. But you have to prove it to me with your taxes. If you prove it to me with your taxes, then I can use this rent and go and move here.
The rent is only to offset the mortgage, or you can use it as income if you have extra?
Okay, the rent, is it only to offset the mortgage or can you use it as income? It has a variable. I'm going to tell you the rule in a minute. Was there another question?
Yes. What happens if you can, for example, in the situation that...
Are you the only one in Zoom, Gonzalo?
Huh?
Are you the only one in Zoom or you're the only one that is not muted?
No, I don't know.
Okay.
I'm in Zoom. I'm Mercedes.
Go ahead, Gonzalo.
What happens if you can prove that someone else is making the payments in the house in the conventional loan? For example, you live with your brother and your brother is paying you prove.
Okay.
And can you buy an FHA or not?
Yes, but I'll explain it in a minute. I'll explain that rule in a minute, but yes.
Okay.
To give you the answer, yes. Another question? Okay, so what Dulce asked, if I want to rent this property, this other property that it was in Panorama City, and I'm gonna move to this other one, and this is a rental property, if this is a rental property, can I use the rent to offset or can I use the rent as income? The FHA rule says, if you have this property for 2 years on your taxes, you can use it as income. But only if you have it for 2 years. If you have it for less than 2 years, you can only use it to offset the mortgage. And guess what? You need 25% of equity. 25% of equity, and you can offset the mortgage only. But if you have it in your taxes for 2 years, then you can use it as income. Pinche Julio, pensabas que no me la sabía, ¿verdad, cabrón? So, make sense?
So, just to make sure, so if it's on the, no, but you need, okay, so if it's gone 1 year, 1 year on your taxes, you can offset the payment.
I can offset the
And
premium.
I don't need that 25% income.
You don't need
No,
the,
equity, I'm sorry.
well, you do need the 25%
That's
equity
true,
uh-huh,
25%
to offset the
of-
mortgage, to offset the mortgage. Yes. Mhm. But at least I can say, well, it was already a rental. This is my departing property and this is my departing property. I'm going here. Mhm. I have done this in the past. I have done this in the past. Make sense? So I answer your question, Dulce. Now, Gonzalo says, what if in this conventional, I have this conventional, and I'm moving FHA, and if I prove that somebody pays the payment on this one, if I prove that somebody pays the payment, so in my house, let's just say that it's Oscar and Javier, and we already talked about Penelope. So Oscar, Javier, and Penelope. If I prove that Javier and Penelope pays for the mortgage for 12 months, then I can buy FHA with no problems. This property is not my liability.
Even if they're not on the loan?
The rule is they have to be on the loan. The person making the payments has to be on the loan. So if for whatever reason, Pulido was making the payments and Pulido is not on the loan, the rule doesn't apply. Now we have a client qualified. I believe Patricia is in the meeting. I don't know if Patricia is in the meeting or not, but we have a client qualified. So in this case, Oscar, and I'm gonna tell you a secret, but don't burn me on the secret. Oscar is on the loan, Javier is on the loan, Penelope is on the loan. I'm not using Oscar Jr. because he has my same name. Not because he doesn't love Oscar Jr. So we are 3 on the note. But it so happens to be that Jose Pulido makes the payments on the mortgage. Jose Pulido. Now, what are you going to ask Jose Pulido to prove that he makes the payments? Bank statements. How many bank statements? 12 bank statements. One with a 12-month transaction. So one bank statement. You can ask him for 12 if you want to. You can ask him for 12. But you only need one bank statement, official bank statement. Why do I need the official bank statements? Because I need to prove who makes the payments. Who's the owner of this bank account? And then if I show just the transaction history of the mortgage payments, then I'm okay. So get Javier, add him to the bank statement. On the next month bank statement, Javier is going to show on the bank statement. So who's the owner of that bank statement? Javier and a guy by the name of Jose Pulido. Well, Javier is in the bank statement. Javier is on the note. A 12-month bank history covers the guideline. Make sense? Make sense?
That's very, what if the 3 of you are on the loan on the first one, but it's also an FHA?
You can, if it's also an FHA, as long as I prove that I was a non-occupant co-borrower, it's not my liability. As long as I can prove 12-month bank statements, I can buy FHA.
Okay. No, not occupant. Well, you're currently, that's your departing property. So Oscar, Javier, Penelope own that home.
And this one is FHA. This one is FHA. But I prove, Oscar proves that Javier makes the payments, then this is not my liability.
Okay.
Even if you live there.
Even if I live there. Even if I live there. Why? Because I thought that I want to buy a house with my kids, but I only have my kids, and this is his payment, and I do live with him. But shit, he's getting old, and he has some weird ideas, and I want to move out. Make sense or not?
So
You currently live with your kids. I mean, in the next 3 years, one of them is going to leave. Why? Because he don't also want to live with you guys anymore. One of the 3 is perfectly understandable. As long as that person doesn't make the payments of that mortgage, he can go and buy another FHA, regardless if it's FHA or conventional.
But so that's another example where you could have 2 FHA loans.
That is correct. That is correct. That is correct. Make sense? Questions? Now, the rule of FHA with everything on FHA is that the other people that are making the payments, they're under contract. The same applies to vehicles and installment loans and student loans. The other person has to be on the loan. Everything with FHA, the other person has to be on the loan. Conventional loans, don't get confused. Conventional loans, they do require that the mortgage, everybody's on the loan. The other person making the payments is on the loan, on mortgages, but they don't care about vehicles, they don't care about other liabilities. Other liabilities, as long as you prove that another person makes the payments on conventional loans, you're okay. Not with the mortgage. With the mortgage, the other person who's making the payments has to be on the loan.
Not unconventional?
Not on conventional. And when I say on the loan, it means on the note, not on title. But he's on the title, he's not on the loan. But he's on the title, he's not on the loan.
Okay, I have one scenario right now where it's not on the loan, they add him on title. I know it's not gonna show on his credit, but it's gonna show on MERS. So
But he's not on the loan. He's not responsible for the loan.
on a convention. Or when both.
On a mortgage,
Mhm.
he has to be on the loan.
No, he's not on the loan, it's just on title.
Yeah. In order to eliminate that debt from him, or to prove that he makes the payments, he has to be on the loan.
So
If
so
he's
they're
making-
gonna hit him with a payment because
It's gonna hit him with the payment, or add the other person who's on the loan, add him to the bank statement and prove it that way. But what Maria is asking, okay, let's, so we don't get confused. With FHA and conventional mortgages, So I have Oscar, I have Javier, I have Penelope, and I have Jose Pulido. Now, Jose Pulido is only on title. And Jose Pulido makes the payments. Hey, Jose Pulido's on title and I can prove that Jose Pulido makes the payments. Doesn't work. It doesn't work that way. Jose Pulido has to be on the loan. Has to be on the note. We don't care about title. So if I'm proving that Jose makes the payments, Jose has to be on the loan. And this works for conventional and FHA. Okay. For conventional, for other liabilities, they don't care if Jose is on the loan. Other liabilities, I mean furniture, vehicles, student loans, all that stuff. They don't care.
Now let's say Pulido is only on title and he wants to go buy with an FHA loan. And
Okay.
he's not on the loan, but he's on title.
Now, if Jose Pulido is on title, he's the owner of this property. Now, if he's the owner of this property and he wants to buy an FHA, he's gonna get hit with an FHA payment of the both properties. He's gonna get hit. Now, FHA, let's understand this because I just closed a loan. This way. So FHA to FHA, you cannot do. Now, if you have conventional to FHA, you can do, but you usually need to qualify with both mortgages. So as long as you qualify with those two mortgages, you can do an FHA loan. In the case of Maria, what Maria is saying, hey, I got Jose Pulido's on title, and he wants to buy FHA. So in a way, Jose Pulido doesn't have anything here, but he wants to buy FHA. Can he buy FHA? Well, when we run MERS, it's going to show that Jose Pulido owns this property, and Jose Pulido bring me everything that is involved in this property as far as payment, and I'm going to hit you with both payments the same way as this one. Unless you remove Pulido from the title. If you remove Pulido from the title, then he's not the owner anymore.
That's another solution, right?
That's another solution. Done it many times. Make sense? Questions?
They remove it with a quick claim deed. How long it needs to be seasoned?
The next day, as long as you can prove that it was registered, we don't care. He's not on title anymore. Now, if he goes back on title after he closes, we don't care either. That was something that he did.
What was the question, Oscar?
So how far back do you want me to go?
No, just the last question. I didn't get it.
What
was
was
the question David
Uh-huh.
asked?
So what was the question?
Someone on title can buy an FHA. If
Uh-huh.
you like.
So the question was that as long as he's on title, Juan, as long as he's on title, he's responsible for the payments of this property. So he needs to qualify with both properties. But so the question was, if I remove him from title, if I remove him from title, then he's not the owner of this property anymore. So he doesn't get affected because he's not on his credit and he's not on title. Now, the question was, how long does he need to be removed from title? Does he need to be removed from title for X amount of time? And the answer was no. As long as you can prove to me that you went to the county and you registered the quitclaim deed or the grand deed, then you're not the owner anymore, and that's it. Not notarized. It has to be notarized and the seal from the county.
Okay. Got it.
Okay. Any more questions regarding this? Does it make sense?
Yes.
Okay, so now we're just going to talk about a couple of things real quick. That has nothing to do with this a little bit more, but just two quick things with FHA. The next meeting, we're going to talk about a little bit about 203K. But for the next meeting, so in FHA there's a 6-month rule, and the 6-month rule means that if you were employed and then you have a gap of employment of more than 3 months, then you need to be back on your work for at least 6 months before the case number. I don't think that the case number matters on this one. I'm sorry. So as long as before you close, the client is back on his work for 6 months, then you're okay. But you have to be back at your work for 6 months if you have a gap of employment for 3 months. Now, you have to prove in this company, I believe that you have to prove 2 years of employment. But the FHA rule, if you want to go more specific by the FHA rule says you have to prove to me that you have 2 years of employment before the gap. Now, this 3 months is 3 months. It could be 89 days and you're okay. But if it's 91 days, then the rule applies.
This is specifically for FHA.
This is specifically for FHA.
In case of maternity,
No,
this will apply also.
Maternity doesn't apply. Maternity doesn't apply because you just came back. Disability and maternity doesn't apply. It's just gap in employment that you just stop working because X, Y, Z reason. Any questions with these rules? This is very, very important. A lot of loan officers forget about this rule. They just see you get back in employment, you're making this, you're making a salary, you're good to go. No, you have to show that you're 6 months back.
What if that gap is longer than 3 months?
If it's longer than 3 months, then the 6 months. So that's 3 months or more. Now, FHA is very flexible, extremely flexible for the gap. It could be 6 months, it could be 9 months, and then you came back to work. As long as you came back to work for 6 months and you prove to me that you had 2 years of employment, then you're okay. You have to provide a letter of explanation. What happened with the gap? It has to make sense, the gap. As long as it makes sense, then you're okay.
When somebody was working and the company closed and she was out of work for 1 year, then she found another job in the same line. How long it needs to take?
6 months at the new job. 6 months at the new job. Now that's a great letter of explanation. Well, the company closed. I took care of my kids. They were a little bit young. I want to spend more time with my family. and then now I'm back at work, but you need to be back at work for 6 months. There's engineers that I run to that says, you had a gap. What was the problem with the gap? Well, I mean, I just finished with this job, and since I make good money, I just took this months off. And I just write it, hey, he just took 3 months off. Obviously, his salary, he's an engineer, makes sense.
FHA loves family. As long as you see something about your family.
Well, Maria says FHA loves family, so as long as you say something about the family, then you're okay. Does it make sense? So the last thing that we're going to cover, real quick, is when you buy 3 to 4 units.
Oscar, before you change, and I know we're talking of an FHA because we don't want to get confused. For conventional, is different than gaps, right? Or the same?
Conventional doesn't require you to be back at your work for 6 months. It doesn't. Now, as long as you can calculate income at the new job, then conventional doesn't require you to be at work for 6 months.
With the first check.
Because I see where it says, well, I've been out for 1 year, you have to be back 1 year.
No.
I heard that the guideline where it was off for 1 year, then you have to be
conventional.
Work 1 year.
Conventional, it depends. It depends on the line of work. It depends on your new job. It depends on the gap. So conventional is more flexible in a way that you can go at your work, back at your work, or it's going to require you more time, depending on the job, depending on the time that you were off. Julio, you have something to say?
No, just to add to that, I mean, no, those are good points, but a lot of us get confused. It's 2 different issues. To calculate the income is one issue, and to calculate your employment history as another issue. It's 2 different things.
So in conventional, it's very flexible. If you're dealing, for example, like I said, with a professional person that makes salary. If it's a professional person that makes salary, conventional is very flexible because it's salary. Here it is. But if it's a nurse, it fluctuates the hours so much that's like Pulido says, well, I can only go by the history. If you're going to give me 2 months, that's your history. If it's too high and it doesn't make sense with your previous job, I'm not going to take it. I'm going to average it with your previous job. So that's when you need more history of employment. So that's why Pulido says it depends on income or back at work. But conventional is a little bit flexible with back at work. You can be back at work within 2 months. Do you agree, Pulido? So buying 3 to 4 units. The rule is the same. But we're only going to talk about 4 units. If you're doing a loan, if you're doing an FHA loan for 4 units, this rule, it needs to pass before you do anything, before you qualify, before you do anything. The rents of all the units, 75% of the rents of all the units, regardless if you're going to live in one, 75% of rents from this one, it needs to be greater than the mortgage payment. If that rule doesn't pass, you cannot do this loan. You cannot do FHA.
I'm sorry, the 75% has to be greater than the mortgage that you're
Payment. PITI, completely PITI. Now, regardless of the down payment. So if you're putting, but I'm putting 50% down payment. Well, if the mortgage, the rental income is not greater than the mortgage payment, regardless of your 50% down payment, you cannot do the loan. But the client makes $1 million in income. If your client makes $1 million in income, if this rule doesn't pass, you cannot do an FHA mortgage. Gonzalo?
Yes, can you make an example with numbers? Because I'm losing a little bit with the 70%. Okay,
so let's just pretend that each rent is $2,000. So $2,000 $2,000 and $2,000. It's a total of $8,000. 75% of $8,000 is $6,000. Yes or no? Gonzalo? 75% is $6,000. If the mortgage payment is $6,001, you cannot do an FHA loan. But the client makes $1 million in income. This rule has to pass first. But the client is putting 50% down payment. This rule needs to pass first. If this rule passes, you can continue. And now you can qualify your client.
But I have established rent from the other 3 units that they've been there, and it's a long-term lease. They've been there forever, paying 2,000. I can't use the 2,000 instead of I have to go 75%.
That is correct. So what Pulido is saying, I thought that he was on drugs, but he's not. Che, Pulido, sacaste de las mangas. So Pulido says, hey, if these units would be, they've been paying $2,000 for years. So if they're paying $2,000 for years, and I can prove that to the seller with the seller taxes that they've been paying $2,000 a year, can I use the $2,000 and not the 75,000, the 70%? No. The rule is very specific. 75% of the rents, it needs to be greater than the mortgage payment, period. Now, if for whatever reason you run into a listing agent that says, well, it's rent control, and this one is rented at 500, and this one is rented at 700, and this one is rented at 500, and this one is going to be the vacant property, and it can be rented at $2,000. You have to take the 500, the 700, and this, because the appraiser is going to say this is the actual rent, and they going to go by whatever is less, the actual of the market, or the market. 75% of that, it needs to cover the mortgage payment. You cannot even start qualifying the client until this rule passes. You cannot start qualifying the client until this rule passes. So if you're buying a property in LA and the client tells you, and the agents tell you, this is this is my brother Enrique's story. It has great potential. The property is a $2 million property. They're great because they can be converted. They can be greater than. Enrique, you cannot do it because it's 75%. And right now they're being rented at $1,000. A $2 million property, the payment is going to be $13,000, Enrique, and they're being rented at $1,000. And the market rent is $1,500. So it can, Enrique. But it has a lot of potential. But it has this, but it has that. No. It needs to. It's very important that we tell the listing agents, and we have to now. The listing agents, they run. You can talk about this, David. The listing agents, they need to disclose the rents on the NMLS. But if they disclose the rents, then the appraiser is going to see the actual rents. If they're very low, then the appraiser is going to hit us, and that's the rents that we have to use. So we sometimes go to the listing agent and we say, "Can you do us a favor and just don't tell us the rents?" And we're going to say that we're going to do new rents, so we can use the market rents. Sometimes listing agents want to play ball, sometimes they don't.
Sometimes we want to see the appraisal before we close with a tenant for the vacant.
In those cases, I make sure that even before I start the loan, I can work it out. I can work it out with the rent schedule with the appraiser. I can work it out with the listing agent. I can work it out with everybody. But make sure that you don't forget this rule. On conventional loans, they don't care. Conventional loans, they don't care. FHA, they do. Any questions, comments?
Oscar, uno de mis agentes me estaba preguntando, and it has to do with an FHA, que dice que FHA is coming with a rule where you can sell ADUs may be sold separately from primary as unit as a condominium. Have you heard anything about that?
I think somebody asked me that question.
Yeah, it just got signed by Governor Newsom on October 12th. But the thing is that it's signed already. but then the cities have to approve it. And there are different cities in County of LA, so some cities might say, I don't wanna do it, and they're not gonna do it. Some cities will say, I wanna do it, I wanna get into it. For example, LA City, I'm pretty sure that they're gonna do it, but I think this is gonna happen until like 2024 or 2025.
Now,
So it's too soon.
now the city approving that is very different from the bank. So it's very different. You have to understand this. So let's just pretend that it does work. So I have a land, and I have a house, and I have an ADU. So what they're talking about is that, hey, in the future, they might allow you to separate this one and to sell it as a condominium or to sell it as another property. That is the rule, right, Jorge? Right, Maria? Okay. That only is going to apply if the guy doesn't have any mortgage. Because this guy has a mortgage on this APN. This guy has a mortgage on this APN. So he has a deed of trust with me that it says this land is what backs the loan. So you cannot segregate this land in two. I'm not going to allow you to do that. Unless you pay me. If you pay me, then go ahead. But you cannot sell this property. Now, even if you can, and you create another APN, and I don't find out because I'm never going to find out as a bank, when you try to sell it, no, you cannot sell this land. This land is my APN, and it's on my deed of trust.
That is the reason why they're doing it as a condo, because the owner of the condo is not gonna be separated, like the land is not gonna be separated, so you will have to pay as an HOA to the actual buyer. Because the land is not gonna be separated.
So
It's not
basically,
an actual lot split.
so basically,
It's not gonna be a lot.
it's gonna keep together.
Yes,
It's just, I'm just buying my little
correct.
ADU.
So it needs to be approved by the cities. And then like Oscar says, then the banks have to like figure it out if they're gonna lend on them. So that's why I'm thinking 2025. But you know, it got approved by the governor. But we're still. no.
So it was the same thing with the ADUs. They're allowing ADUs. So for example, in so many times, it was illegal to have two ADUs on a property. So if you have one ADU, we're okay. If you have two ADUs, oh, that's about 3 units. But if you have a third ADU and it's attached to the property, then we might be able to do it. But that is the problem with the city being able to do something, but the lenders are a different story.
Because one of the things for the lenders, just like Oscar said, for example, it just got approved with FHA that you're gonna be able to take the income from the ADU. Because that's a federal law, it's a federal rule. And something California comes with their own things, but in a way, lending, it's across the board. So that's why sometimes it takes a long time for the lender to approve these type of things. Because it's not a California lending thing, it's a federal thing.
The example that Jorge is talking about, the federal, is if you work at a workshop that sells insurance or distributed or wholesale marijuana. Marijuana is legal in California, but it's not federal. It's federal approved. If it's not federal approved, then the bank says, well, if you work in a place that is not federal approved to work at, then I don't want to lend. So right now we have that issue, David, that if a client works for a marijuana shop, we cannot lend to that guy. Now, what these marijuana shops are doing, and it's very intelligent, and thank God for us, is that they create a name that is just Pulido's Green Store. And if it's Pulido Green Store, well, they're probably selling plants, and that's okay. But if it's Pulido Marijuana Shop, come on, then we have a problem.
If you're rich, you're going to get.
Any questions? Comments?
But it's good what you tell me, because then the agents call me and ask me, and it's like, oh, I don't know what to say.
I didn't think about it. Told me on this.
In the previous example of the like 4 units, in conventional, you can use the 75% of the rent.
Yes. Now in FHA you can also. So If for whatever reason, like Gonzalo said, give me an example, Oscar, with numbers. So like Gonzalo says, so now we have the 4 units. So this is the question that David asked. So now we have the 4 units. And using the same example that they get rent at 2,000 every unit, and it's 8,000 gross, and 75% is 6,000. And let's just say that for whatever reason you're buying the units in Bakersfield. Now, if you're buying the units in Bakersfield, 4 units are going to run around, let's just say 500,000. So with 3.5%, the payment is going to be around, let's just say 5,500. So the 6,000 covers the 5,000. Yes. So now we can proceed. Now my buyer, who's Fernanda is going to live in this property, and Fernanda can use the rental income of this $6,000, 75% of the $6,000 to qualify. But like I said, the rule is you cannot even move forward until this rule passes. If the rule passes, then now can Fernanda go here? Yes. Now, if Fernanda is buying with, what's the name of your cousin, Fernanda? Cristina. So if Fernanda is buying with Cristina, and Fernanda lives in Orion Street, and Cristina lives in Canoga Park. So if they live separately, then Fernanda goes into this unit and Cristina goes into this unit. Why? Because they don't live together. So, and I can use the rent of this too. Now, if for Cristina and Fernanda, they live together at Orion Street, and they're buying 4 units, then I can say, well, both of them are going to live here because they already have a history living together, and they can use the rental trees. Now, if Fernanda, and if I can prove with a good letter of explanation, maybe a photo, Fernanda's buying with a boyfriend, and the boyfriend lives in Canoga Park. They don't have a history of living together, but they're dating, and hey, here's the letter of explanation, and here's the pictures of them. Then I can use that. But the rule is, if you don't have history living together, then you have to occupy a unit specifically. Regardless if it's your mom, if it's your XYZ, if it's Jorge and I, Jorge lives in one part, I live in another one, and now we want to buy units. We don't have a history of living together. Jorge goes into one unit, I go into the other.
That doesn't apply for duplex, right? Only for 3 or 4 units?
That is correct. No, duplex also. What I'm talking about, 2 separate people, it applies for duplex also. So if I'm buying duplex and it's Jorge and I, we live separate. Jorge goes into one unit, I go into the other one. I cannot use rent. The only thing that I can use rent is if we have history right now, the living together. But once you pass this rule, you can use the rent.
30%?
75%.
No, but after, I mean, but the rental income that you can use from the other 3 units cannot be more than 30% of your qualifying.
No, that's for ADUs. No?
That's for ADUs. No, not for units. No. Now, what I have done in the past, and this is just mainly the rule is that if you're going to occupy a property, a 4-unit property, you need to occupy the bigger one. So this is the one that pays more rent, or you're going to occupy the bigger one. Now, if my wife and my kids are buying, we're going to occupy the bigger one. Now, if Fernanda's buying by herself, then we can have a case and say, well, Fernanda's by herself. He found a great property, and Fernanda's going to occupy the small property, the one that pays $800. Then the rent, I don't use it. I use the rents of the 3 biggest one. Hey, but Fernanda's not using the bigger ones. Well, it's only by herself. But if Fernanda's buying with another person, then you have to occupy the bigger one. Make sense? Any more questions? Comments? I hope this was productive.
Thank you.
Thank you.
Thank you, Oscar.
Okay.
Thank you.
Yeah.